All right. Collectively, this group here owns roughly about 40 properties, and that's a mix of long-term rentals and short-term rentals. But we recently got into multifamily investing, and we are so excited. And we're going to break down exactly why we like it, what maybe some of the barriers are, and kind of what's happening next with the property. So let's bring on my business partners. We were missing one, but Vinci, Jason, how you guys doing today?
Doing good. Doing great. Happy Tuesday, y'all.
They are oozing with excitement, as you can tell. So real quick, let's just go around the room. I'm already talking, so I'll go first, just kind of our quick backgrounds. And so what we do, how we got into real estate. So my name is Josh Baldovino. You can find me, let me hide this, at Joshua_Baldovino. And my background is I do marketing full-time for a winery, post a lot on social media. And then I got into real estate investing roughly about 2.5 years ago. Bought some long-term rentals in Columbus, Ohio. And then actually these two gentlemen on this side of the screen, Vinci and Jason, they convinced me to go into short-term rentals. So that's my background. Vinci, I'm going to tag you in. What's your quick background and how'd you get into real estate?
All right. So quick background. I'm mainly in short-term rentals nowadays. I still do hold some long-term rentals as well, but I guess some would say I am a short-term rental expert, but I don't really see myself that way, I guess. Um, but yeah, I think getting to short-term rentals has been a pretty good way of scaling our real estate portfolio. We also co-host for others, and I also have a coaching program. Um, Other than that, though, yeah, I can move it on to Jason here.
Awesome. Hey guys, my name is Jason Kane. I am a mortgage professional by trade. I help active investors with starting out their real estate investing and also scaling the portfolio through approving some funding for their deals. Now I also help other investors who wants to do passive investing through multifamily through our company, Invest Capital. I do have background having my portfolio out of state in Indiana. I have properties as short-term rentals, long-term rentals, and now mid-term rentals. But the main focus of this topic is going to be multifamily. So I will be focusing on some insights regarding the asset.
I think what's fun about our group collectively is for all of us, we've kind of sampled everything. And I'd love if you're watching live right now, thank you all so much for taking some time out of your day. That means a lot to us. Definitely in the comments, say hi and let us know where you're tuning in from. We can also bring them on screen. So if you have any questions, let us know. But just for some quick context, uh, Jason, since you are unmuted, can you run us through how we ended up in the Ventura deal? And I'll bring it on the screen as well.
Yeah. So this is the Ventura deal. This is a 111 unit that we acquired late last year in Mesquite, Texas. It's a neighborhood in Dallas Metro. The way we got into this deal was through our other business partner, Ashley. She has a connection with a very established syndicator in Dallas market. So she has been investing in his deal as a limited partner, as a passive investor. And the opportunity came, and we expressed interest in, going into multifamily ourselves. So the lead GP gave us this opportunity to raise some money and help with managing the property. So we did raise about um, 10%, 12% of the whole raise of the purchase. And currently, we are now managing the property as asset managers, connecting with the property manager, working on the rehab, and also trying to get the occupancy back up. Um, and yeah, that's it.
I
Anything
love
I
it.
missed?
No, I mean, thanks for the context and thanks for whoever you are tuning in from Sacramento. Facebook, unfortunately, has some weird things you might have to accept. If you're watching on Facebook, at the bottom of that, there's some privacy settings on how you can get your name to pop up. But I love Sacramento and I love, gosh, what I did a meetup there in Sacramento. But let's go into our first question here that we wanted to break down the pros and cons of multifamily investing. We'll start with the goods of why we switched aggressively. Vinci, as you mentioned, you are a short-term rental expert, but yet you are also very bullish on multifamily. Why?
Well, if you run a short-term rental portfolio business, it's a very active business. And what I love about multifamily is just the fact that you can scale to multiple units. In this case here, our Ventura deal was 111 units. And it would take me a lot of short-term rentals to reach that number and that count. Um, and what I love about it is the passive behind multifamily. Now, I know there are some people who say, well, you can invest passively as well into short-term rentals, but honestly, I think you're wrong. I think that multifamily is the best way to invest passively in real estate, where you can hire um, property managers and have a team like our Invest Capital team who helps bring in the deal, bring you the deal, and kind of work that all together for you. In short-term rentals, it's you're dealing with one property and you're dealing with guests and all these other things, and so it's a very active business. We like being able to take our cash flow from our active business and put that more into more multifamily, into more passive income. So that's why we love it.
Totally. I will second that short-term rentals are very, very active. Much more so than multifamily, actually. Jason, what about you? Why are you so bullish about multifamily?
All right. I'm bullish with multifamily only because I have managed so many short-term rentals in the past, and actually I'm still managing them. And it is, like you guys mentioned, very um, time and effort intensive. And what I like about multifamily is you can buy like one building and all of your operations are very centralized. So you can set up systems where, all of those decisions will affect and improve all the units that you have in that building. Whereas with short-term, rentals, it's usually individual properties where, like you're probably gonna have like 100 different individual types of um, problems that you have to solve. So that's why I like multifamily better.
Totally. This ends up being like a short-term rentals versus multifamily investing. For me personally, I mean, if we're gonna go on that theme, as you experience, and if anyone watches me on YouTube, you'll know that especially in Joshua Tree, you have to be to the nines, meaning you have to be the cream of the crop to get any type of bookings. For multifamily, specifically, especially in working class areas, you don't have to put a huge mural in your property and have this crazy luxe pool or a hot tub, but you are providing safe, affordable homes for families, and that's a very what is it? Recession-proof business and asset class. And then also the economies of scale is because you are now buying a bigger asset, which yes does cost more money. We'll get into the cons in a little bit, but if a property is, kind of the rule of thumb seems to be about above 70 units, you can hire a full-time on-site property manager, and that is only dealing with that property for 40 hours a week. So that is a huge advantage versus on other asset classes where it'd be a long-term rental. You maybe have a smaller mom and pop operation that is driving around to 50 to a couple hundred different properties at any given time, or on a short-term rental as well that kind of spread out versus with a multifamily, you have one person dedicated to your specific property. So those are just a few of the benefits. Throwing it back to the gang here, or actually, I'll throw it back to the comments first. If you are investing in multifamily, or if you want to invest in multifamily, why? Let us know in the comments. Vinci, Jason, any other things or any reasons why you're investing in multifamily?
I think you hit all the big points, buddy.
I love it. Well, you can still, if you're watching this live, thank you again. You can still let us know in the comments. Okay, let's go on the flip side. Very different, right? For us to be syndicating deals, to bring people together to invest in multifamily, but there are obviously challenges or barriers or cons to multifamily investing. Who's got one?
I can chime in on this.
Okay.
So coming from the perspective of a passive investor, there is that liquidity uh, part of the investing, right? So if you are invested in a multifamily syndication, your money is probably going to be stuck there until the exit, which usually takes about 3 to 5 years, as opposed to other types of investing, stocks, for example. You can put your money in a brokerage account. If it gains, then you can actually just withdraw it and sell the stock. If you invest it in a single family, you're only going to be selling or refinancing one type of asset as opposed to, you know, selling one big property, which takes longer to liquidate. So I would say, if you are a passive investor, that would be a quote unquote con if you need the money right away. So I would say if you are a passive investor, um, considering investing in a multifamily syndication, only invest an amount where you wouldn't need the money immediately. So that's one con I can think of.
Yeah, I mean that's really smart. I'll go on this one. So the con for me, as we're talking about just different asset classes in comparison to multifamily, is if you're buying a long-term rental, wherever it be, whether it be in state, out of state, locally, or short-term rental, as long as you have the income and or capital, or the rents kind of cover the mortgage payment, you can get into a deal relatively easy. And there's a bunch of steps to buying your first property, and definitely buying your first one is a huge achievement. But the next level of now buying, say, 100-unit apartment complex, you can't just go to a bank and say, I would like to buy this 100-unit apartment complex. They look at you crazy and would say, what makes you think you can even do that sort of thing? And so usually you have to have someone with experience, especially if you're going with something that big. There is some potential if you're going and you're starting off maybe at a 5-unit or 10-unit, where I have seen people jump right into that. But especially when you're looking at bigger deals, and you're working with professional property management companies, that is a big barrier, that experience. And so you either have to find somebody else like we did to help get us in, or kind of build your way up. Um, Jason, Vinci, any other cons that you guys have?
I do want to point out, actually, based on some of the things that you guys were saying, like it has a lot to do with the investors, I guess, financing, right? Financing. And so I think that has a lot to do with the reason why a lot of these syndication deals, when they raise money, they set them up as like a 506B or 506C, where they mainly take in a lot of accredited investors, right? These accredited investors typically are high net worth individuals, right? And the reason why they do this is the SEC um, has this rule where, if you decide to invest in a deal and invest in this real estate syndication deal, because you're a high net worth individual, they won't. There's a lower chance that they'll lose their livelihood if the deal goes sour. And so I think you can look at that like as a pro, or you can look at that as a con, right? There are only a limited amount of non-accredited investors these syndication deals would likely take, while others. So there is a possibility, if you're not a highly accredited investor, then there may be opportunities for you to invest in a syndication deal, such as the one that we raised for. So yeah, I would say those are some of the pros and cons that I see. Um, and typically, the SEC doesn't like working with individuals who may have shady backgrounds or whatnot. So those are the kind of things that, at least, you got to also do your due diligence and look into the people that you are partnering with, their track record, and that's extremely important.
So it seems like with the commonalities of the cons, it's all kind of just based off of the structure of how multifamily deals actually work out on the back end, right? Versus on the pro side, it's just balancing how active you would like to be in your real estate investing. Before we go into kind of just quick updates with our deal specifically, Do either of you have any other pros or cons to add? No. Sweet. Okay. You guys make it easy. Okay. If you guys are live, by the way, and you have any questions about our current deal or what we've learned, you can drop them in the comments and we'll answer them. We'll do a Q&A right after this. But like I said earlier, this is our Ventura deal. It's 111 units, and we closed in December, so it's been 5 months now, and there have been so many different things we have learned. That's for sure. Jason, you want to go first? Do you have any big takeaways or things that you've learned since we've been on the GP for this deal?
Yeah, sure. So, one thing I've learned and discovered managing this property is we can rely heavily on the professional property manager that we have for this unit. That's a big kind of like difference compared to what I'm used to when we are managing a portfolio of single family residences, where you do have some managers you can rely on, but you still kind of have to push them. Whereas if you own a multifamily property, then the property manager that you're hiring is professional. They probably have managed thousands of units before, so they probably have SOPs or standard operating procedures for all of the things that could come up with that property. So you pretty much don't have to do a lot of legwork when it comes to managing the asset. So that's really one thing, that I've learned.
Love it. Vinci, what's your takeaway so far?
Yeah, there's definitely a lot to do with the let's see here, the asset management portion of the multifamily side, and we are still in the trenches and learning a lot. Um, yeah, so I would say it's a continuous learning lesson, but I think one of the great opportunities that our team has here is we are so embedded in the asset management because we're new and we're young and strappy or whatnot. And so I think that a lot of big multifamily operators out there, when you look at their efficiency, a lot of them are probably those who have like maybe hundreds or thousands of units, probably operating at an 80% efficiency. But with the strategies that we take, that we're currently undergoing, you can take that operation uh, efficiency from 80% to 95%, which bodes well for our investors and for ourselves as well.
Love it. That's a really interesting kind of number that you're throwing there. For me, my takeaway is that when you're operating smaller deals, your team may not be as big. And the team that we have, I mean, with Invest Capital, there's four of us, and we each have a variety of different things that we like to do. And on top of that, there's Tony and Jack, who are amazing already at what they've done with the deals in their past, and they bring a lot of experience. And then Jamie and Chang have done, gosh, like shout out to Jamie and Chang because they're definitely holding it down. Like, for example, I would not be able to audit water records and then find a way to backtrack to figure out there's a sprinkler that's wrong. And that's only because Tony and Jamie have the experience somehow to figure that out. That would be beyond my abilities. And so being able to really have enough room to have more people who are way better than you at other things only make the deal so much better. So, I mean, there's a million other lessons. Do either of you have anything else you want to share?
Nope, I'm
Uh,
good.
I I also just want to add that like for bigger deals like this, um, relationships, whether it is between you, the investor, and other passive investors investing in your deal, or you as a general partner, with the team that you have, is very important and pretty much vital to the success of your deal, right? So we have to rely on our passive investors wiring their money on time so that we can wire it to the lender, so that we can purchase the property. So, and also we have to rely on the property managers to really take care of the properties so that we can give returns to our um, passive investors. So it is a big balancing act as well. But back to my point, like if you didn't have like good relationships with any of those people, then you wouldn't be successful as a multifamily syndicator.
I totally agree. The relationship key is how we actually got to the deal in the first place. Without that, there would be nothing. But man, this has been fun. It's kind of nice to kind of decompress and reflect on the deal with you guys all. Next time we'll have Ash for sure. If you are watching this, whether you're watching it live or in the post play, you can leave any comments that you have for us down below, and we'll do this episode or do episodes like this once a month. And so if you have any questions about the multifamily commercial space, let us know. That helps us program the show as well. But let's go ahead, and if you want to connect with us more and build those relationships, I know that you two have something going on this weekend. What's going on?
Yeah, we are hosting a in-person event in Santa Ana, California, 4th Street Marketplace from 12 to 3 p.m. We're going to be expecting about close to 100 people there, but there's going to be a lot of time for investors to network with other people. We're going to be talking all things short-term rentals, long-term rentals, hotels, and multifamily. So it'll be your chance to meet myself or Jason in person. We'd love to meet you all, and yeah, happy to see you guys all there.
Sweet. And for those who are in the NorCal, so actually just for fun, while we're wrapping things up, if you're still watching, if you are either in NorCal or SoCal, put it in the comments. I guess I'm outnumbered right now, 2-1. But if you are in NorCal, Ash and I are hosting our usual meetup at Big Al's this Wednesday at 5:30. So I will see you there. And then, fun thing, we always want to do one at a winery, not at the winery that I work at, but another one in June. We're going to do our quarterly workshop. We are collaborating with Armel, and so that's going to be at 3 Steve's Winery on June 24th in Livermore. So if you want information on any of the events we just talked about, that's all linked down below, or you can visit our website, investcapital.com. Guys, that was fun. Anything else you guys want to share before we head out of here?
No, it's been fun. Yeah, I'll see you guys next month.
All right, let's go. Can't wait.
Well, thank you all. Again, connect with us on social. If you're watching this and you enjoy this, like, comment, subscribe, do all that YouTube stuff. And we'll see you all in the next one. Cheers, guys.
Take it easy, y'all.